Point number 7 in our bonus round of this week's 5 things. We're talking with Tracy Shuchart. I think you did a Twitter Spaces, X, YouTube, all over the place. She goes by @ShyGirl on X, CHIGRL. She gave you her oil predictions for the year. Talk a little bit about that conversation you had with her.
Yeah, so she's a terrific energy expert. She was kind enough to have me on her Mic Drop Markets, her Twitter Space show a couple of weeks ago, and she had me on with Jack Farley, who's somebody I respect. Jack started, as a journalist, became a podcaster, but I will tell you, Rob, when you talk to Jack about things, he's basically like a professional investor at this point. I don't know anybody on his end of the microphone who knows finance or companies as well as he does. So, you really have to be on your toes when you're talking with Jack. But Tracy was kind enough to have me on. And then I had the great opportunity to turn the tables and bring her on. And we do have that video uploaded here on YouTube. And so, Tracy was talking about her predictions for oil for the rest of this year. She thinks we remain range bound with a wide range. Let's clarify that. So a wide range means there's going to be a lot of wiggle room in the price of oil. It'll be up and down a lot, but she thinks it'll stay within a range for the year. And there's some good reasons for that. So the reason we typically are not going to be seeing oil prices, again, in normal times, below $60, $65 is because that's the price that U.S. shale becomes economic. And at that point, the United States is really the swing producer. So if oil prices get down, really below the mid 60s, we're going to see U.S. shale producers increasing production, more oil production. It changes your supply and demand curve. And, I said that wrong. Below 60, 65, you see that production come off. U.S. producers start producing less, and that reduction in supply will send prices up. On the high end, if oil prices start to approach $100, that's kind of a disaster for everyone. The Saudis really don't want to see the world go into some sort of extended worldwide recession. The reason is, in recession, people consume less energy. That reduces demand for oil. So when oil starts to approach the $100 mark, the Saudis tend to increase production or release reserves. And so I think long term, we're going to be looking at higher oil prices. But for this year, Tracy's right. We should be looking at, something range bound. She's thinking mid 60s to mid 90s. That is a pretty wide range, but I happen to think she's right on this. And then in the next few years, we'll be looking for higher prices for oil.